In this lesson, you will explore the topic of funding for education tax benefits. By the end of this lesson, you should be able to explain the available tax credits that can help offset educational costs, discuss educational tax deductions, and understand the tax treatment of employer-provided tuition assistance and direct payments to educational institutions. Congress provides several incentives to promote higher education. These incentives fall into three categories: tax credits, the American Opportunity Tax Credit, the Lifetime Learning Credit, above and below the line deductions, and items that are excluded from gross income, including employer-provided educational assistance, direct payment of tuition and fees to educational institutions. Let's explore each of these tax benefits. The American Opportunities Tax Credit can be used to reduce your tax liability on a dollar-for-dollar basis. The credit is available to a student that is in their first 4 years of an undergraduate degree or certification program. The maximum credit is $2,500 per eligible student per year, and that's based on 100% of the first $2,000 and 25% of the next $2,000 of qualified educational expenses. You can claim the credit for your own schooling or for that of a spouse or dependent, but only one credit can be taken in a tax year. Note that the credit is subject to phase out based on modified adjusted gross income. Unlike the American Opportunity Tax Credit, the Lifetime Learning Credit is available for an unlimited number of years, and it is not limited to just undergraduate schooling. This credit is available to a student in any post-secondary education program or enrolled in any course used to improve job skills. The current maximum family credit is capped at $2,000 per household. That's 20% of out-of-pocket expenses on the first $10,000 of taxpayer, spouse, or dependent educational expenses. The annual $2,000 cap per eligible student is not indexed for inflation. Note that the use of the Lifetime Learning Credit is subject to phase out based on modified adjusted gross income. The IRS also allows you to claim some deductions for educational expenses when completing your tax returns. Currently, an above-the-line adjustment is an allowance for qualified interest paid on school loans. The adjustment is subject to payout, and the deduction cap is $2,500 per Form 1040. So a single tax filer could write off $2,500 of student loan debt, or I should say interest on the student loan debt. Similarly, a couple filing jointly would also be subject to the $2,500 maximum deduction. In addition, you can itemize other below-the-line educational expenses. These expenses would fall into the miscellaneous deduction category, and this category is subject to a 2% AGI floor. There are a few details to remember regarding deductions for educational expenses. First, some qualifying educational expenses do not qualify for credits or deductions. These include tuition that was paid with tax-free income, such as withdrawals from a 529 savings plan or withdrawals from a Coverdell account, grant money, or scholarships. Also, a deduction and a credit cannot be claimed for the same expense. Similarly, only one tax credit can be used for an expense. You can't use both credits. Employer-provided educational assistance is generally excluded from the employee's pay. The current annual cap is $5,250. The assistance is a tax-deductible business expense for the employer. The educational assistance income exclusion is available for both undergraduate and graduate work. Some employers may see benefit in directly paying for the cost of an employee's tuition and books. Generally, this arrangement involves an employee contingency contract, which specifies a period of time that the employee will continue to work for the company. For example, that might be 5 years, and the consequences of failing to fulfill the work commitment, and that might be repaying the company the full cost of the education. The direct payment for education is considered an employee or employer expense, and the benefit is tax-free to the employee. Any salary earned by the employee would be considered taxable income. Certain qualified transfers are exempt from gift tax and generation skipping transfer taxes. A direct payment made to an accredited educational institution, perhaps by a parent or the grandparent, is exempt from gift and generation skipping transfer tax consequences. Furthermore, there is no limit on the amount of the direct payment to that educational institution. A parent, relative, or a family friend could pay the entire tuition for all 4 years. Note that this direct payment can be made in conjunction with other educational saving contributions, such as a contribution to a Coverdell educational savings account. In this lesson, you learned about the American Opportunity Tax Credit and the Lifetime Learning Credit, above and below the line deductions, and the tax treatment of employer-provided educational assistance and direct payments to qualified educational institutions.